How's it, guys? Welcome back to FX Rhapsody. Today I'm going to be talking about the fair value gap, how to identify the fair value gap and how to trade it or wait for your trade to set up. It's going to be a short video, so because there's not really a lot to be said or to be taught about the fair value gap, it's relatively easy. So if there's anything that you missed or I went too fast, just go back and watch the video again, or just leave your comments in the comment section. And also just, and I'll see if I can get back to you. Before we hit the chart, just go visit my website. It's on the bottom left corner over here, where you can find some previous analysis, previous strategies, and also preferred brokers, guys. Go check out the preferred brokers I'm using. And these guys are really awesome, brilliant brokers. They've got reliable support and all that, and then very good spreads and margins and leverage, anything that you need from a reliable broker. So let us hit the chart. So when it comes to fair value gap, guys, you always want to wait for a break setup. But first thing is, and you will notice when I do my analysis as well, I always talk about a break of structure. So what I mean is, if I look at this setup here, or not setup, let's look at the charts. This is now the 1 hour USD JPY. Okay, and then we look at this section over here of price. Okay, so I'm just going to draw this little block area here. So we can all say that this little area in the block, or this area, I'm just drawing it. You can actually draw it from here, or you can just have a couple of wicks in there. It's all up to you. But you can all see that there's some kind of a consolidation happening here, some sideways movement, a range happening, and then price not breaking out of that range. And as soon as you see a big push, okay, of any price, be it upwards or downwards, you see that break of this area, of this structure basically that was happening. Look, it is not always going to look as pretty as this, right? So I'm just taking this as an example quickly. So you have a big bullish candle, breaking this consolidation, the sideways movement, okay? And that is when I'm always talking about a break of structure. So let's just take that area. I'm just going to put it over there. And look, guys, the more you do this and the more you practice this, the more you will see it. So you have that break of structure over there, right? Big bullish candle. And now what you do is you want to take your candle. Let's take this. That's going to be your first candle that you're going to be looking at, okay? And then that's going to be your second candle. That's going to be your fair value gap area. So it's going to be the candle just before the break and the candle just after the break. And you take the wick, okay? There's the tip of the wick. That's the highest the previous price went, and that's the lowest the next candle after the break. That's the lowest, price went. And that is where you draw your fair value gap. There's the imbalance in the market, okay? There's a gap right there. So that is going to be your fair value gap, okay? So that is always when I mean fair value gap, and that is when you wait for price. So let's just go to where price where price currently is sitting at. So a little example over here, okay? You have price moving up and down, and then you have some sort of a consolidation, okay? You have this area in the market. There's a price high and low, okay? So that is the area that price, excuse me, went up and down. I'm taking this over here because you can see price just slowing down as it moved down. There's no real big movements in the market. There's no big candles pushing down, okay? Until you see this candle over here. So I'm just going to draw this line over here. There you go, okay? And as you can see, that's kind of like a low area in the market. That was like a support area in the market. You can see that was a candle over here supporting that area, just a wick. Price coming in, just resisting, being support on that area. That line has not been broken, and then you have this big push. This is obviously a news candle that happened. You'll see it on the lower time frames, but that is the area that you draw your fair value gap at. Okay, so I just want to show you here. So that's your first candle, and that's your second candle. That's the first candle, or the candle before the break, and the candle after the break. You have the big bearish candle. Okay, just as I showed you just before now on the bullish candle, this is the bearish one. So you have that fair value gap that was created in the market. Then what you do is you just take that block area and you just move it sideways, and you wait until price comes into that area in the market. Okay, I always wait until price hits that area. Now, a lot of times, okay, I'm just going to say this, a lot of times price only comes in, excuse me, only comes and it touches that area and then it shoots down. So there's two scenarios, okay? You can have a trade, you can place a trade. I'm just going to do this. Let's say you wanted to sell. And you can place a trade once the price hits the bottom area of that fair value gap. And what I have is, then I'll have my stop loss just above that fair value gap, okay? The risk basically. So you have a big risk. But what I do is, and what I've found is that when I have a fair value gap drawn out in the market like this, okay, I'll wait until price hits at least halfway of that gap. To get the halfway mark is relatively easy. You can use any type of tool you want, but I'm using Fibonacci. So I'm drawing it from the top to the bottom, and then I'm just using my 50%, which is my green one over here. So I'm putting a line right over there, and I'm pulling it sideways. Okay, that is the halfway mark of the block. You can also, if you click on it, you can see that's the halfway, and you just draw a line straight through. Okay, so what I do is, instead of placing a trade right when price hits that, instead of placing a trade once price hits the bottom of that block, of that fair value gap, I'll wait until price gets halfway to it, because then my risk is obviously a lot less, okay, as you can see that. So, and as we see, this is just a scenario, but I mean, this is a scenario that just played out. As you can see, this is where price currently is. So, and I've showed you countless of times how this works and how this plays out. So as you can see, price coming up, hitting that halfway mark, okay? And that is where you place your trade, you have a smaller risk in place, and look at how price drops. It always retraces back to that fair value gap. You must remember that it doesn't always retrace back. It could take a couple of days to do that. Okay, so let's just run back to this example at the, over here. As you can see, I think I did do an analysis on this as well. So as you can see, price didn't immediately come back to that fair value gap. But eventually, if you pull it sideways, look at that. Price retraced back to that. So you can either have the fair value gap as a entry on your price, or let's say you entered at the top here. So you entered at the top over here, okay? Be it a fair value gap, be it Fibonacci, or whatever the situation. And you want to know where your target is going to be. Your target will be where the next fair value gap at the bottom is, because price gets drawn to those fair value gaps. So I hope you understand that. So the fair value gap is not always just an area of entry. If the entry doesn't happen, if price just continues downwards, and you have another buy entry at the bottom here, your target will be that fair value gap at the top, because that is where you'll enter. Now, this is the 1 hour time frame, okay? So let's look at I just want to see if this is on the 15, there we go. So let's say this happened on the 1 hour time frame. The fair value gap, was created, price going down. Now you drill down to your lower time frames. I love the 15 minutes. 15 minutes is always a good time frame to trade in. So as you can see, now this is my 1 hour time frame fair value gap. Okay, that's the gap that was created there. So now on the 15 minutes, this gap is a little bit bigger. Okay, just want to show you now why. Okay, so you have your first candle, or your previous candle after that big bearish candle, and then you have your candle just after that. So that is going to be your gap. Now this is what I'm talking about. A lot of people, and I've done it a lot of times, and it depends on you. Just, the more you do this, and the more trading is not just about the fair value gap. There's so much into trading, so you kind of get to read the markets. And a lot of times, yes, you enter when the price gets to that, just hits that fair value gap, and then it goes down. Like over here, you could have had a entry and then selling down. But like I said, rule of thumb for me is you wait for that halfway mark. Okay, so let's just pull it over here. So now we're doing this on the 15 minutes. It's a lower time frame. And as you can see, there's a lot more noise obviously happening on lower time frames. Oops, for those of you that's not, familiar with trading. So there we go. So we pull it to the side. Okay, there's my line. Not 100% straight, more or less. So as you can see, there was an entry over here where price pushed into the fair value gap on a lower time frame. Then it went down. Then it came up again, right into that block area again. Okay, so let's say you were a scalper. So you scalped these areas, but you were all waiting, patiently for the bigger move. And the bigger move would have been that halfway mark. And that is where your entry will be. Okay, and as you can see, price going down. So guys, that is fair value gap in a nutshell. That is, not a lot to say about it. There's so many videos about fair value gap out there, and how to use it. But some of these videos just get drawn out. And I don't want to get a drawn out video, and I don't want to make a drawn out video. So this is basically how it happens. So whatever I've showed you here, you can practice that on your daily. You can do it in any time frame. Okay, so daily, weekly, or weekly, daily, 4 hour, 1 hour, 15 minutes, drill down to your 5 minutes, 1 minute. Okay, those time frames are really good time frames that you can enter on with the fair value gap. So again, that is one thing that is just part of the whole big puzzle of trading. So if you get the fair value gap and go back in your charts, go practice it. Do back testing, run. What I mean by back testing is go back, and then see if there's any movements over here, if there's any fair value gaps that gets tapped into, or price retracing back to that fair value gap. So that is what back testing is, and that is how you practice your trading. And the more you do that, the more you will see it happening in the markets. All right. So that is when you train your brain gets muscle memory, and things happen, and you see it, and you're like, there it is. That's all from my side. I hope you enjoyed this analysis, and if you did, hit that like button, hit that subscribe button, notification bell, and comment. On the comment section, let me know what you think. And there's definitely more videos coming to you this week, and I hope you've been having a wonderful day so far. Happy trading, guys.